Versa best company.
Versa Business System.
It's a better
Versa Business System.
Versa Business System.
Welcome to the Versa Business Tips Podcast. I'm your host, founder, and CEO of Versa Business Systems, Shaheen Mazloom. We're here with a very special guest today, founder and CEO of Nokomis Advisory Services. John, how you doing today, John?
I'm doing wonderful. Pleasure to be here.
Thank you. Thank you for joining us today. So, we're talking a little bit before the show, but for those out there that don't know who you are, tell us a little bit about yourself and what your company specializes in.
Okay, so we talked a little bit that all the tips that you give on all your other podcasts, and when business owners implement them and they grow the business, we come in when it's time for them to say, maybe it's time for my next great adventure in life.
Right.
And hopefully it's not, they get up one day and says, I'm sick of this, flip the switch, get me out. But they think about it few years in advance and they raise the dimmer switch so that it's bright and shiny on the business when it is time to exit.
Right.
And you get caught up in a business and you realize that maybe you're not, after a while, you realize maybe I'm not doing all the things I could do to make it attractive to a buyer. But most owners don't think about, if I do those things, it's a better business for me.
Right.
So hand in hand.
Yep, absolutely. I think a lot of the times, as entrepreneurs, especially in the beginning, we get wrapped up in just trying to make money in the beginning. And then that carries on for years because you just get into that rat race and then it comes time to exit and you're like, oh, damn, we don't have a value or, it's, I think there's a lot to be said that needs to be a thought ahead of time. Are you going to exit or are you going to hand it down to your kids? If you're going to exit, there's a lot of things that have to be done to exit at a top multiple, right?
That's right. And, you go from it early on is I better be able to make payroll next week.
Right.
To, hey, things are pretty good. Why should I take any more risk and try to grow? You had a buyer and any kind of buyer, individual or professional, like private equity, wants to see growth potential. And you mentioned family. There's a lot of owners, they just can't give it to their kids. It's
Right.
a big chunk of their net worth. So the kids have got to pay for it somehow. And whether it's a bank loan or almost like an annuity, which I've helped people put together to pay them off over a long period of time.
Right. Yeah, I noticed there's so many businesses for sale. People say that we're in this big, massive wealth transfer, right? Where the baby boomers are selling their businesses, and is the reason why so many businesses are willing to do owner finance or pay me over, the next 5-10 years or whatever it may be, because there's so much other, competition as far as businesses for sale? Or is it more to do with those businesses just don't hold the value that they're looking for?
Well, it's the latter.
Yeah.
Some people will say, we have a client right now who says, hey, I'll finance it over a big chunk of it because then I won't have a big tax hit right away,
Right.
which isn't, at capital gains rates, it's not much different. But for the
Right.
most part, if you look on all the advertising sites of businesses for sale, most of them are junk.
Yeah.
They are.
We've noticed, thousands of businesses going up for sale on Facebook Marketplace.
Yeah. And those are probably even smaller than the biz buy sell and businessesforsale.com.
Yeah.
A lot of businesses where they're scraping by I'll just be nice and say a mediocre living, working hard, but it's never taken off. There aren't as many good businesses for sale.
Right.
Businesses with profit after paying the owner a fair market salary, have some of the things that buyers want. A big one uh, is the buyers want to see a business where it's not dependent on the owner. The owner is not the only one who can, and then you fill in the blank, program the machine, make this, have the sales connections, do approve or do all the bids. They want to see a business where people under the owner have responsibility, and
Right.
that the owner can go, well, this is a good story I wrote many years ago. Uh, if you can go away for 3 weeks and you come back and the business is in as good or better shape than when you left, you've shed yourself of the day to day. And a
Yes.
guy who's the president of a company I'd worked with, he wrote me, he said, I just got back from New Zealand, 3 week trip. The business is doing great. I feel good about it.
Yeah. Yeah. I mean, it's tough because, a lot of the times, as business owners, it's our baby, right? This is something that we started from nothing. And, a lot of business owners have a hard time stepping away. But, I noticed, so I got married, actually our anniversary is on Sunday. So a year ago.
Congratulations.
And thank you. And it was the first time I'd actually taken a step away from the company and not been on my phone the whole time and working as I'm away, right? So we did a destination wedding and then we did a honeymoon for a week. So I was gone 2 full weeks and everything ran great. The company made money, and it was the first time that I realized, like, maybe they don't need me as much as I think they do. And so now I've been able to focus on other things within the business, growing the business, getting better lead management, hiring more people, things like that, rather than running the day to day. And I think you bring a great point. Dip away, go away for a couple of weeks and see where you're at. Right.
Yeah.
Hundred
And
percent.
there's nothing wrong as an owner with going away and checking in every so often,
Yeah.
make sure the ship is not listing to one side or the other.
Right.
But uh, you know, a, the owners who think, well, I got to have my phone with me on the beach all the time because I'm so important, really have less value than those who can say, I'm leaving the phone in. Let's go. Let's get in the water.
Yeah. Yeah, exactly, 100%. I mean, when you're coming across these businesses, so they're reaching out to you. They're like, "Look, I need to add some value to my company. We're trying to exit here in the next couple of years." What are some of the things that you're noticing? Like, are there some common rules that you're realizing businesses aren't focusing on that they should be sooner rather than later?
Yeah, there's a handful or so of really, really important ones.
Mm.
Owner dependency and is one, and getting a company to delegate, and not just delegate uh, from the owner. I did a project for a client. I did like five projects for him
Right.
over the years, and one of them was he's going, I'm not making enough money, and I came in, did no, not rocket scientists, science stuff. I met with all groups of employees, had a separate meeting with all the management,
Right.
came back and said everything has to get across your desk before there's any movement. You need to start delegating. He
Yeah.
started delegating, and a month or two later, he says, "My people are frustrated now because I'm delegating so much." And I said, "No, got to teach your people how to delegate. You do have a third level and a fourth level of staff,
Right.
so it carries down." But here's a really big one, real big. Don't have your accounting department be like Cinderella, the little stepsister off in the corner.
Yes.
Have good financial systems, have a good person in accounting so you have accurate statements, and more than accurate statements when your business gets large enough. And that's it, large could be even 3 to 5 million in sales,
Right.
and that you can get management reports, not just a QuickBooks statement. So you
Exactly.
know where your KPIs are, whether it's for sales or operations or anything else.
Right.
It a good bookkeeper slash accountant is is well worth the little extra money over a not very good bookkeeper.
Right.
And you see that I see that in statements all the time. And you're asking, what is this? What is that? I mean, my favorite one is I asked someone, how confident are you in your financial statements? And I get this boisterous, 100%, they're in really good shape. And I said, well, why are there balance sheet items on the income statement? Just yesterday, I'm talking to a client, and they just got her 2024 financials. And I said, well, what's with this? What are these amounts due from shareholder her? She says, I have never uh, borrowed money from the company. I never need to, but it's on her balance sheet.
Right. Yep. I had it's funny you mentioned that. I had an accountant the first 4 years I was paying myself. That's how they labeled it, was a loan from the company. I'm like, and so when I got a new accountant in, they're like, what is this? It says you owe the company, $700,000 or something. I'm like, what? And yeah, but you bring up a great point. I mean, without the right financials and the right analytics, I mean, you can't possibly know if your company's even profitable.
That's right.
If one thing is wrong, I mean, it could all be wrong.
Yeah, and the balance sheet is just as important as the P&L,
Yeah.
especially to a buyer.
Yeah.
And they want to see what kind of working capital is needed, how you collect money, what assets are there, when are they have they been depreciated? Which book depreciation doesn't mean much. It's more, when do they have to be replaced? Things like that.
Yeah. Yeah, exactly. So it sounds like the biggest one is organization, right? Whether it's a financial standpoint, their KPIs, their numbers, and then from there it's delegation, right? Like, are you married to the business? Are you working for the business, in the business, or on the business, right?
Yep. On, not in is better, and
Yeah.
that dependency carries over to other things, customers. Buyers and banks, investors get spooked when they say, "Oh, there's one customer, 60% of our sales," and then the owner says, "Well, the owner of that company that does all that business with us, we're good friends. We golf together."
Right.
And buyers thinking, "Yeah, and what happens when you
Right.
don't
When
own
you
it,
don't own it, right?
or what happens when the customer's kids take over their business and say, why are we doing it with him? Why aren't we, spreading out?"
Right.
And
Yeah.
so that means the supplier concentration can be deadly too if you flip that around.
Yeah.
And I've seen banks do due diligence on a company's top supplier because they were worried, if that supplier has problems, our client has problems.
Yeah, exactly. It's like like trucking companies. If they've only got two trucks, if one goes down, that's half your revenue, right?
That's right.
So there's we've helped a lot of trucking companies grow past that 10 truck mark, because it's like, if you only have two trucks, you're going to have a really hard time selling your company for more value than the trucks are worth.
That's
You
right.
know what I
You
mean?
got it.
No, no,
Yeah.
100%.
And that means
Um,
you only have two drivers, and if one driver quits or gets sick,
Exactly. It's 50% of your revenue gone. So we talked about the mistakes companies are making, when it's coming down to exiting. There's one thing that entrepreneurs have uh, in them, which is never giving up, right? But there's also something to be said about knowing when to move on, right? Knowing when it's time to exit and when it's time to move on to something different. I don't think entrepreneurs ever fully retire. Most entrepreneurs aren't the type to just go kick back and golf every day and sit on the beach. There's going to be some kind of hustle and bustle, or some kind of deals being made, until the day we die. But what are you seeing as far as, um, you know, what should business owners be looking at, as far as when it's time to really start focusing on the value of the company, and possibly moving on to something different? Because I think a lot of the times that tends to happen when things starts to go south, right? Or you hit a cap. And that's generally not the time you want to sell, right?
Especially when it's going down.
Right.
So there are different signs for different people.
Mm,
Some people, it gets very obvious. I don't like this anymore. I don't like going in. I don't like managing my 20, 40, whatever people. Uh, and to others, it's just something happens in their life.
right.
It could be their health, their spouse's health. The big, the more catastrophic the event, the more urgency to sell. But I don't see too many divorce, death, or disabilities.
Right.
It's usually retirement or burnout. But you talked about when should they start doing things. Well, if they start doing them now, while they're not even thinking about it,
Right.
they'll be in a position of my friend Brian, who got approached by a private equity backed player in a complementary industry and made him an offer he couldn't refuse.
Right.
And they went and did it's the quality of earnings report is the buzzword now. Brian called it a financial colonoscopy, and he passed it with flying colors because he was ready.
Right.
He paid attention to the numbers, the people, the metrics, the KPIs, all of that.
Right.
And I feel very fortunate. Our last three clients that uh, we helped sell their business got the quality of earnings report. And there was one little thing in one of them. It was the difference between a sale made at the end of 2023 that, because they were on a cash basis, wasn't reported until 2024. So it
Mm,
made 2023 really should have looked much better in
right.
2024, not as good. And the buyer said, that's just a timing thing.
Right.
We know the business is solid.
Yeah.
But last three passed with flying colors. Uh, that those are people taking care of their business, and it shows through their financial systems.
Right. Right. And now, when you say, we talked about, obviously having a solid bookkeeper, accounting department, but would you say technology is now playing a big role in that?
Well, technology is. I mean, it, it's probably been 5 years since I've run into a company that still did everything by hand.
Right.
Someone who just couldn't advance themselves even to QuickBooks. But QuickBooks can and others. Even in my little company, which is two of us. My daughter works with me,
Right.
and two associates who are not employees. We I get into QuickBooks and it automatically assigns all my credit card charges that I have matched.
Right.
And I can go in and zoom. 80% of it's done.
Right.
And technology is good, but that is something that all owners should be paying attention to is their IT.
Yeah.
We were talking before the show about your podcast a while back on cybersecurity.
Yeah.
And IT is way up there on should be on due diligence lists.
Yes.
All the ransomware and
I mean,
phishing.
it's crazy. I honestly, after that podcast, we invested six figures into locking everything down, and I mean, it could cripple a company. Just one wrong click of a button, and someone's in all your systems and got all your customers' information, and I mean, it's crazy. And it's
I'll
happening
give
all the
you
time.
I'll give you a scary story or two here, real quick. One is a client, and we were talking, and he's we were talking. Somehow we got on this subject, and he said, "Yeah, my bookkeeper stopped me in the hall and said I'll get that wire out before the deadline." And he goes, "What wire?"
Right.
Someone had spoofed her, made it seem like
Email
he had
account.
sent something saying, "Send wire this money for this client to this account." Of course, it
Oh
wasn't the
yeah.
client's account,
Yeah.
but you just talked about getting information.
Yeah.
uh, Worked with a company. We were on our way to having a deal, really good deal for him to a larger company in his industry,
Mm,
and his managed service provider overseeing all his technology got hacked. It tells you how good a managed service provider is.
right.
They got hacked.
Right.
he dealt in sensitive information, financial information, social security numbers, things like that. It cost him $500,000 to get it fixed, and that they got out of the ransom thing, but
Right.
most of that 500 went to government agencies who fined him for him releasing information thanks to
Yeah.
his MSP getting hacked.
Yeah. It's crazy. It's I was talking to a guy the other day. He does security for a hospital. The hospital gets hacked by the Russian mob. The hospital, in order to save their clients' information, it made more sense for them to pay them $1 million.
Yeah,
A hospital in the U.S. is paying the Russian mob $1 million to go away. It's like it's crazy, these hackers and what they're able to do nowadays. I mean, my marketing guy showed me the other day. There's a free application that allows you to send a text message to anyone, and you can spoof their whole cell phone. I can send you a text message. You click on that link. I can now text everybody in
yeah.
your phone. Hey, do you mind shooting me a couple bucks real quick? You know what? It's crazy. And
Well, that's the stuff you would see in spy
yeah.
shows, movies, and now, yeah, you're
And it's
right.
just becoming more common and more more dangerous than ever. And security is a big thing.
I,
Um,
I
you
would
know.
say I get a text on average, a text a day
Oh yeah.
from something I just hit report,
Yep.
delete, and report junk because it's just innocent stuff like,
Yeah.
"Hi, how are you? Hey, we haven't talked in a while."
Yep.
Uh,
Yeah,
it,
100%. If you don't recognize the number and they're not saying their name and who they are, report and remove it. If that person wants to get a hold of you, they'll find a way to get a hold of you.
that's right.
But if it's somebody they really knows you, they can get a hold of you many a ways, but just responding to a text message, you can So, John, it sounds like the biggest things when you're looking to sell your company or have a nice value is tracking, accounting, making sure you've got really what's going on based on the numbers and the accounting, and that you're not married to the business. The business doesn't just need you, and you should be in a good situation. But are most people now trying to sell their company to someone within their industry? Is that who you're trying to become more attractive to? Or are you trying to become more attractive to someone that maybe is just trying to get into business?
Well, it depends on the size of the company.
Okay.
So if you have certain size ranges, and we don't work with the main street businesses, the
Right.
delis, the dry cleaners, we really target companies worth about 5 million to 15 million, and we
Yeah.
stay away from the investment bankers and and don't want to infringe on the main street business brokers. So you say selling to someone in the industry, as that has got so blurred because private equity firms and family offices of all sizes buy into an industry, and then they bolt on others.
Right.
So it's a again, it's a little blurred. Is it a true competitor? Like, I'm John and you're Shaheen, and we're both in the widget business, and one of us wants to buy the other one. No, it's I have a widget business, and this private equity firm has bought a couple in there, and they would like to add me on because they want to be a presence in our community, or we have a special niche or something. So it's not as clear as it just sounds in the words. But what
Right.
are they? But when you get to that size, you get a professional buyer interested. We talked about some of these things. We talked about delegation. They are buying more than anybody people.
Yeah.
So you have to be able to hire and retain really good people.
Right.
Because if you delegate to someone not very good, it doesn't work. Then the
Right.
owner gets
Yeah.
caught back into the swamp.
Yeah. Yeah. 100%. I mean, um, you've got people that if you're a company that's been around a while and your longest tenure employees only been there for a year or 6 months, the value of that company is going to go tremendously down versus a company that's got people on board that have been there for many years, right?
Right.
Right. So John, I got to ask, so what is the best time to get someone like you involved in this process? I know you mentioned earlier a couple years in advance to the exit, you want to start working on some of these things. When is it time to go to your website and set up a call and start making these plans for that valuation and for that exit?
Well, I'll give you 3 answers. One is anytime,
All
because
right.
if you do those things and you get, like my friend Brian, someone comes in through the side door and says, here's a wad of money, more than you thought, but you better prove that you can. It is what it is, and it can grow.
Right.
I have CPAs who have told me start the process 6 years in advance, because if you have to make any entity type changes, it's probably going to take close to a year, and there's a 5-year phase in if you go from, say, a C corp to an S corp, etc.
Right.
I say if you've done some of those things and you're in good shape, you really should be looking at it about 3 years in advance. And why
Right.
3? Because buyers and banks always ask the starting point 3 years of financial statements and tax returns. So if in those 3 years you make changes and you document them and you can point out what you did and the result. In other words, I hired
Right.
a salesperson in a new territory, and since I hired that salesperson, our sales are up 15% a year, and I hired a second one a year and a half later and they went up. You're telling them we know how to hire and train people, and it will grow the
Right.
business. And there's other
Right.
examples on things you can do like that. We do some work with clients getting them ready. If it's project work, we don't do that big project where, say, you need an interim COO for a
Right.
couple years to straighten out operations, or an interim chief marketing officer to kick your marketing off. There are
Right.
people who do that very, very well. We do mostly. You want to do it yourself, Mr. or Miss Owner? We'll coach you. We'll give you a plan, and we'll check in with you. But you're going to be doing it, not having a consultant type or interim fractional.
Right. I gotcha. That makes sense. So, you just recently, I don't know if it was recently, but you have a book out called, remind me what it's called again? It
Exit,
was like
exit with style, grace, and more money. Came out
Style,
at
Grace,
the
and
end of
More Money.
last year.
I love that. I love that title, by the way, because everybody wants to exit with style, grace, and more money, right? So from what we were speaking about earlier, if our viewers and listeners want to get an e-copy of that, how do they do that, and where can they go?
They can go to our website and fill out the contact form, nokomisadvisory.com, NOKOMIS advisory.com.
Okay,
And just
great. I'll put that in the
mention this
description.
podcast. We'll send you an e-copy of that book.
Awesome. Well, I appreciate it, John. It's been great talking to you. I'm probably about 5 years from exit. But I think you make some great points with a 3 year. I mean, I would say almost 4, because if you can, in that 1 year, you can get everything to where the next 3 years your finances are perfect. You've got the right bookkeepers. You got everything recorded right. You're sitting in pretty damn good shape, right?
You are in real
I
good
love
shape,
that.
and you just
Love that.
concentrate on growing the business, because a friend who was formerly a president of one of the divisions of Expedia, he told me, he said, growth hides a lot of operational warts. You grow and then you fix the warts.
Right. Definitely. Totally get that. I appreciate your time, John. We'll talk
Yeah,
soon.
pleasure. It was fun.
Pleasure's mine. Thanks, John.